Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning and good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader, and today we have a great topic. It's really easy to remember. It's really gives the definition of topic. It is topical. Today being Leap Day. It's an extra day of the year, of the month. It's the last day of the month, and we are going to talk all about it. I want to welcome to the show, as usual, Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. Great to be here. Going to start off on a little bit of a sentimental kind of moment here for me. If you guys follow me on X, people probably saw yesterday I posted it was 10 years ago yesterday that I had my heart attack at my trading screens. So took the day off, went golfing. I got tons of messages from family, friends, people on social media. So I want to thank everybody for that. And that's why leap year is always kind of a special thing for me, because when I look back at my life, I almost didn't have a leap year. You know, it was February 28th. That was the morning I woke up, was having chest pains, went to my desk, sat there and was like, man, I can't believe I'm having pain in my bicep, into my forearm, into my wrist, 36 years old. Went to the hospital and they told me that I was having a heart attack. And the question I get all the time is like, did I have blockages? Did I have this? And I didn't have anything. I didn't have any blockages. They didn't put any stents in. It wasn't anything like that. It was really a stress-induced heart attack from probably years of internalizing pain and things with trading. And I just want to say to everybody, when you approach these markets, so much of what we're doing, the pressure that we have is the pressure we put on ourselves. And we don't realize how much we're internalizing this stress. And it's why I've talked so much about taking actual time away. It's why I've slowed so many things down in my life. And to be able to do this for a career for a long period of time, so much of us put the pressure on the moment right then and there versus thinking out the longer term and having a big picture plan of success in this business. And it's just, the message is just slow things down, follow your plan. Don't put too much pressure on yourself and enjoy your life, prioritize yourself. That's the message I put out yesterday. So I just wanted to start there.
Well, we're all happy you're here, of course, and you listened to those warning signs that morning, and how great it is that you have a day every year you can reflect and think about what you've been given, right, with that recovery.
Yeah, I mean, it's crazy for me to even think it was 10 years ago, because you know how some things are ingrained in your memory, like you feel like it was yesterday. To me, it feels like it was yesterday, and it's every year it's that reminder of work hard, but make sure you have balance. People will say work hard, play hard. In this business, I'm a big believer of work hard, play easy, prioritize yourself. The goal is to be in business for a long period of time. It's actually an interesting year for me because it's 10 years since I had my heart attack. It'll be 10 years since I started my Futures Radio Show podcast, which I started the year I had my heart attack, the beginnings of it, which was kind of, something I did because of the heart attack. And then ultimately I'm in my 25th year since I got my membership at CME Group, which is actually next week. So it's kind of all of these years you look back and you're like, wow, man, it's been 25 years since the day I got my badge. I remember going in, it was actually right around this week. So many things at the end of February and beginning of March in my career. I remember getting that badge, and we'll probably talk about that next week's show, because that's my 25-year anniversary of becoming an independent trader.
That sounds great. Well, speaking of anniversary, speaking of dates, You had a great topic this week. I love it. Trading the last day of the month. And, where does that show itself? Does it show itself in every market, or is it specific to mostly stock index futures?
Why the end of the month? Why does it matter? And it's primarily index futures to answer your question. I don't trade the other markets on the end of the month. I don't look at them in the same manner as I do with equity indexes. Going back to the trading floor, I remember a handful of times where everybody would always be in the pit. It would be an FOMC. It would be the market open, the market closes. It would be end of the months, first day of the months. And why are people in for those specific times? And some of them aren't, they're like, I only mentioned FOMC in terms of a time where everybody be there. The rest of the times is just time, right? Mornings, afternoons, end of the months, beginning of the months. When you look at it from the perspective of a trader, the traders are always looking to see where flow is. We talk a lot about order flow here. End of the months are a time when big traders, big players in the space have to do something. And when I say have to do something, it's a time when you get to that last few minutes of the close, and the people that maybe bought or sold at the beginning of the month are either buying or selling at the last day of the month. A lot of shuffling in terms of, end of the month, end of the day orders are all coming through at once. So those are orders that are hitting the tape that have to be done. Okay. And so anytime a trader in the space has to do something, they become more exposed, right? Throughout the middle of the day and throughout the middle of the month, think about it from this perspective. A lot of times people are doing stuff if they have to buy, for example, 1,000 E-minis or 10,000 E-minis. They're not going to the market all at once. They'll slowly be buying or selling because they don't want to either spook the market, or they want to be kind of hidden. They'll basically buy 50 at a time, or 100 at a time, and slowly get their way into the market. Because anytime a big player in the space has to do something, they try to disclose that as best they can, right? And they're not going to be in a big hurry to reveal what they have to do. But at the end of the month, you have a lot of people all at once that have to do something, right? I mean, you've even got day traders that at the end of the day have to get out because of margin requirements overnight. So you have all of these people coming together all at once that have to do something. So why does it matter so much to someone like me? And why do I think this is such an important topic? I talked about 25 years in the space. If I go back and look at my career, the best days I've had, if I had to take my top 50 best days, 50% of those are probably going to be the last day of the month. And it's because of, when we get to the charts, I'll show you some things that I look at. It's because in those moments, I can take on a very minimal amount of price risk for a really good amount of price reward. Mm-hmm. And it's because a lot of times, even though there's a ton of volume coming in at the end of the day, at the last few minutes at the end of the month, a lot of times it's one directional, just because there could be, there's always going to be some sort of weighted volume that comes in, meaning the volume is going to be weighted to the buy side or to the sell side. I mean, sometimes it's pretty balanced. Like you see at the end of every day, most of you probably see these volume spikes at the end of the day. Well, that's just a lot of traders closing out books, and you're going to see a lot of volume on both sides. And a lot of times it balances out. It doesn't really mean much of anything. It's just at the end of the day, a lot of big orders are coming in. I mean, a lot of times I'm closing out orders or entering orders, as many of you are too. So you have a lot of people coming in, but at the end of the month, it can be swayed a little bit. And so when we go to the charts, I'm going to show you today some things that I look at that will maybe give me a little bit of an edge into the end of the month.
Awesome. Makes sense. Makes complete sense. It's a lot of things happening all at once, and would love to see how you look at it on the charts.
So let's take a look at the charts. First off, I'm almost always using bar charts in here, right? Candle's a great way to look at how I'm going to determine the end of the month. It's probably the only time I'll pull up a candle chart, is really just to give me an idea of where we opened or closed on the first day of the month, first day of the quarter. And I like to see how that day went. Okay. So if you think about this, a lot of times what happens the first day of the month, there's two scenarios for the last day of the month. Either it does the exact same thing or it does the exact opposite. And there's a repeated pattern I've seen over and over and over and over again. And that is that you're going to get either the identical reaction to the first day or the exact opposite reaction to the first day. Now, the trick is, which way is it going to be? And what I will look at is what has been happening on a regular basis from the first days of the month to the last day of the month, just by looking at the bars. So when we pull up a daily chart here, okay, we can go back and we can look at the first days of the month. And here we are in the NASDAQ. And you can see here, okay, so F is February. So first day of the month here is green, okay? First day of the month in January was red. So if the first day of the month in January, I believe this is the first day of the month in January, I have to actually double check. I don't know how I'm checking my date here. But what I'll look for is if the first day is down, what did the last day do? And I'll go back several months and I'll look and say, okay, is the first day down? Then did it end up? And a lot of it's going to come down to market environments. What was happening within the market environment? Are we in a primary bull trend? Are we in a primary bear trend? You can go back and see a lot of times first days of the month in bear trends are shorts. They'll start off selling the first day of the month. And on the last day of the month, it'll be a buy. And bull markets, you'll see a lot of times first day of the month is a buy. And the last day of the month, especially in the early months of the year, it'll be a buy at the first day of the month and then a buy in the last day of the month. And the reason is in a bull market is because you have orders that come in and buy the first day of the month. And if at the end of the month, the market is doing okay to up a little bit, a lot of times you get people that are chasing performance or people that want to buy and they try to get in before that last day of the month and they step in and they'll buy the futures the last day of the month. Also look at it from the perspective of the stock players out there. The easiest way to get access to the indexes, if you've not been long NASDAQ or if you've not been long the S&P, is to step in and buy futures because they're leveraged and you can get them on your books fast and efficiently. So if you're somebody out there who's managing money and you want to get access to the indexes, you can come in with a much smaller amount of your capital and step in and buy futures. And you can make a pretty decent percentage in a short period of time if it goes your way, okay, by using the futures markets, which is why order flow is always something that's very important. And you'll see a lot of people look at COT data and all that type of stuff to see what it is. We can talk about COT data another time. But the point of it is that order flow is going to come in and you have to try and game it and guess it and say what's going to happen. Now, when you look at the first day of February this year, you can see that it was a green month in the NASDAQ. And here we are towards the end of the month and a month that's up modestly. And here we are opening on a technical basis, just above the 5-day moving average here. I've talked about some technical levels and you look at it and say, it's been an okay month. If you've been long at the first day of the month, I started thinking to myself, if it's been a buy, okay, does it have room to potentially run? Do people want to potentially chase this into the end of the month? If the month was up dramatically, let's just say we're up 10%, I'd probably be looking at a short. But because the month is up modestly, and I look at it and go, and we're kind of near highs, if you've been short, where is the squeeze potential? Squeeze potential is higher. And so I look at based upon what the month, beginning of the month is towards the end of the month, and I'll say potential squeeze higher in NASDAQ. So to me, the NASDAQ today, I'll look for a potential rally into the close. Technical supported, first day of the month says, look at, we've been buying it, or the market's been buying it. You look at even January, there was buying at the last day of the month towards the end of January, and you could see that flows could be the case. Let's take a look at S&P now. Now, S&P is where my bread and butter has been a majority of the time, and it looks actually very similar, but actually S&P, from a technical perspective and from a percentage perspective, I think is having possibly a little bit of a better month. Still the same type of thought process. Buyers first day of the month, overall trend is up. We're near all-time highs. The month has not been great. It's not been bad either. Market's up on a day like today. As we get towards the end of the month, you think about where do those orders start to come in? And I would look at it and say, likely for them to step in and try and buy what the first day of the month is, right? And so you're going to potentially look for that to be a buy. Now, remember, I said there's a couple things, and there's a lot of, I want to say, what's the word I want to look for here? There's nuance to this, but it's one of those things where it's not a science. And like when I put things out there on Twitter and I'll be like, I'm looking to buy in the last 5 minutes, or I'm looking to sell in the last 5 minutes. The reason is just because of time and things that I've looked at. This is not something that you're going to go out there and, say, I can't really build a strategy around this, because there's an environment around it. And when you're in a bull market, and if the market would be up dramatically, I'd be thinking different on the first day of the month versus the last day of the month, versus a market that's up modestly, versus a down month in a primary trend, right? If they bought it the first day of the month and the last day of the month were lower, or some people might look at that as a buying opportunity. So it's one of those things that you look at, and you have to have an open mind about it, but you have to understand that the environment is going to matter. The environment matters. It's not just because we're up the first day, we're going to be down the last day. It's not just because we're down the first day, we're going to be up the last day, or vice versa. Looking at in environments. And so this month, I see probably buyers coming in across the board in the indexes.
So, Anthony, one thing you said that really, resonated with me is that the first day and the last day, they will be moves, right? They won't be dojis. You rarely see doji candles, open equals close on the same day is what I'm getting, right? You're looking to see if the last day is going to do the same thing or the opposite. But what struck me is you definitely experience moves of some sort, a bigger candle, if you will, on the first day and the last day of the month. And that's because of these reasons that traders have to get into positions, have to get out of positions at the ends of the month, at the end of the month, the beginning of the month. Do you find that when you're looking from, let's say, end of the month to the next day, is there a way to say, like, I'm looking at February, last day of January was down, first day of February was like a reversal candle up.
Yeah.
And that could be because that was a sell-off in an uptrend, right? I understand it's an environment thing, but do you often see that there's a reversal? Like if the last day is down, the next day will be up, or, is that dependent on trend as well?
So once again, there's context and nuance,
Yes.
right? And so in January, it was interesting because you had a first day down, last day down. And I go back to it, that is almost the rarest day I see in an upward trending market. And I was actually trying to buy them the last day of the month in January. Versus February, you have a first day up and it might be a last day up. And so I go back and look at the context. There's no right answer to that, is basically the way I look at it. And here's part of why are we discussing this on Develop Your Edge? Because a couple things you have to understand. Last days of the month, first days of the month, traders have to do something. Mm-hmm. So there's a different feel to the market. First morning of the month, first day of the month in the morning and into the close, order flow comes in, and it's probably going to be most likely dominant in one direction. Same with last day of the month. And so especially the last few minutes of the day. And so I want you to understand that your technicals don't really matter here.
Okay.
They matter in the sense of shaping around what's happening within the market environment, what's happening within the marketplace. But ultimately, if I have to buy, thousands of E-minis, I don't really care if it's at a 5-day moving average or it's at a VWAP. It doesn't matter to me. I've got to buy them.
Right.
And coming from a place where I come from, seeing that, I saw that firsthand, and I would notice the brokers on the last day of the month, it would be like this. So think about this, everybody. And this is how I started to learn how to trade it. It'd be 20 minutes to go into the end of the month, and I'd be looking up at the Goldman brokers. I'd be looking at the Merrill brokers, and the Goldman brokers would be like, even bid, buy 50, put their arms down, right? Another minute or two, even bid, buy 50, right? Mm-hmm. Like, okay, they're buying a little bit. And all of a sudden, it'd be 5 minutes to go into the close. And all of a sudden, they'd be like, even bid. And, and someone would be like, sell you 50. They'd be like, buy 50, even bid. And all of a sudden they'd be like, half bid, even bid. And locals would be like, 200 at 2 even. And they'd be like, buy them, 2 even bid. And you'd be like, oh my God. Now, as a local, you're taking the opposite side of this nonstop buying, right? And then another broker over there would be going, 2 half bid. And you'd be like, oh my God, now I'm short, because we're taking the opposite side of the order flow.
Right.
And you would see this order flow come in. And then all of a sudden, right when there'd be a minute into the close, they'd be like, 5 even on 500. And locals would be like, 508 even. You know what I mean? And they'd be like, buy them. And you just think, it would be crazy. And so I learned at that moment that they put their guard down and say, I got to buy them, or I've got to sell them. Right. And so when I saw that, I'm like, that move, they have to do it. And so as a trader, I look at it and go, it doesn't matter if I want to be short here. If that order flow is coming in and it's going in that direction, I'm going to go with it, because you don't know how many more there could be. So when I get towards the end of the months, I look at it and go, if all of a sudden I get to see that there's some buyers, I'll start looking at the order flow as well. And they come in and they start buying them, or they're selling them. And you and I say it's just looking at the order flow and what the cumulative delta may be doing. And it starts going in that direction. I step in that direction. I don't fade that. I might fade that 99% of the time throughout the day, throughout the month, because it's getting the resistance or support. That doesn't matter now. And so, because I've seen that firsthand and I've seen that carry through over and over again, watch the last 5 minutes today. Yeah. Don't trade it. Just watch it and watch how it builds up into this move. And then, who knows, today could be a flop and nothing happens. Absolutely possible. But if it starts to go in one direction, it'll almost trade like an FOMC day in a weird way, where it either could just blip up 10, 20 handles, 50, 100 handles in the NASDAQ, or it could be, the opposite side. It could just flip up and come right back down. I mean, there's going to be volatility.
So you mentioned FOMC day, trading like an FOMC day. Today we got a piece of information, moved the market pretty nicely, right? At 8:30, we saw that big jump. PCE came out. But what I hear you saying is there's no timing on this, except, towards the end of the day. There, like you said, there's no, at this many minutes, it's going to do this. You can't say that, but it's just be aware that there could be an uptick, there could be a downtick that starts to build and move towards the end of the trading day, towards 4 o'clock.
Absolutely. I mean, it's just like tomorrow morning on the opening bell, the first day of the month, the first day of March, we're getting into rollover. We're heading into, the first day of March, where you're going to actually have 2 different contracts as the front month of the S&P. You're going to have March into June. The first 20, 30 minutes is not going to really be a technically driven move, right? I mean, it definitely has its role, but the order flow that's coming in is order flow that has to come in. I mean, and I think that this is the part where I say everything works sometimes, nothing works all the time. As traders, you have to understand your strategy is this big in a sea of markets. And sometimes you're going to look like a genius and everything's going to work perfect for you. And you're going to be like, wow, this is a great strategy. This is my strategy. It works great. And the next minute, you're going to be like, nothing I can do is right. This is unbelievable. I can't find a winner by doing the same exact thing. And understand that there's different things happening all the time in the marketplace. Everything works sometimes, nothing works all the time. And sometimes algos and certain things catch on to strategies and they work really well. Other times, markets just have to move because people have got to move inventory. They've got to do it. Right. And when you understand it from that perspective, there's a time, like these times, where people have to do something. And you have to get past the fact that if you lost money on an end of the month or the beginning of the month because your strategy didn't work well, and I go back to my days where I'd be like, I don't understand why. Yesterday, everything worked great. Today, I can't believe it. Well, because there's other things at play. And on Develop Your Edge, I'm trying to make you into a better trader to last longer. I'm not here to tell you, like, this is not going to be a scientific method, but I'm going to tell you that you got to think and understand that sometimes things aren't just going to work the way that you thought they were, because the market is, something else is going on. And so open your mind, open your eyes to understand beginning of the months, end of the months, markets are going to have a lot of order flow. They're going to come in and this thing is going to move. And so I've learned to actually take advantage of them so let's talk about how I take advantage of them because I know we're running out of time. If I think we're going to go up today towards the close, I watch the last 5 minutes. I wait, I step in, I start to buy. I know if it starts going down and they're starting to press against me, I'll put let's just say a 5-point stop in S&P, maybe 20-point stop in NASDAQ. That's it. If it starts not going my way, I'm dinged out. It's over, right? If it starts going my way, I try to press it as fast as I can and I let the thing rip and I scale my way out and nothing crazy, right? But I've done it so many times and it's just one of those things where when you see it happening, it's working or it's not right away.
Right. And Anthony, to that point, when you get to that end of the day, let's say there is a big move in whatever direction. Do you find that trend, that big move ends right after 4 o'clock? Does it?
Oh, it goes a few minutes after the open too. It just that thing could just keep moving, man. I mean, it's just one of those things where, they
got to fill their orders, right? They got to
fill them, man. And it goes to probably 3, 4, 5 minutes after the 4 p.m. Eastern bell.
Okay.
And I know we're running out of time here and I want to show everybody something really quick. And so this is something that I'll do. So like today I pulled up Trade of 8, which we know is Ninja. What I did was I used event contracts. I bought 15 of them at $30. This is my live account here. And you could see there's no margin being used because when you buy an event contract, you don't use margin. So it cost me $450, which is well within my risk per trade. So I look at that and go, I'm going to buy them here. If I'm wrong, I lose $450. Now, remember, I can get out of them at any point in time as well. Okay. I'm trading them right here on the dome. You could type in for the NASDAQ ECNQHF and it'll pull up all the different strikes. You could type in ECESH4 and it'll get you ES. I'm doing NASDAQ today. And I bought 18,100s for $30. Obviously, I wish I bought them at 21. They're sitting there right now, but I figured I'm going to throw $400 or $500 worth of risk at it. And if I'm right, I'm going to make $70 times 15, right? And so that's what I'm going to make because my risk is that for that. And so because everything will close at 100 now for these event contracts. Okay. So I wanted everybody to understand that first and foremost, this is a way for me not to have to manage a stop because when I'll go to trade the NASDAQ on the close today or the S&P, I don't want to look at this event contract. I just want to know, are they going to possibly blip up there? I'm not going to have time to execute this and I don't want to worry about a stop. With these, they close at 0 or they close at 100, and so you can buy your trade. And I think this is an interesting way to do it. Since the invention of these, I think it's a way just to buy a trade.
What's the strike on that? What does it have to close at? 18.
I took 18,100s because this morning I figured, if the NASDAQ can push above 18,025 to 18,050, I figured there's a chance. So the risk versus reward, I mean, it's, 333%, return on what, so it's like, I look at that and go, I'm going to risk more than that when I'm buying futures. So this is just part of my allocation. Yeah. Right. And so that's the way I look at it. And if it does blip and close up there, but let's just face it, let's just say we go up to like 18,100 beforehand or, whatever the case may be, I might take some of these off, lock in profit and let the rest go into the close. Right. So if they were to blip up prior to that, if they were to go up to 60, I double my money. If I sell 7 or 8 of them, I can't lose on the trade now. So it's just something also to think about. Yeah. And so end of the month.
That's great. That's great. Thanks. And again, thanks for sharing your journey with the, health issue 10 years ago, the heart attack. I have more questions about that. We'll take that offline, but it's great talking to you, Anthony.
It's great talking with you, Tom, and everybody. Final thing I want to show you guys as well today before we go, brought up the event contracts. I want to talk about a couple things that I'm doing with Place Your Trades. We have a contest right now, placeyourtrades.com. Every single month we do a contest where you can trade event contracts risk-free. This month I'm going to be mentoring 3 people in a live trading session for the winners. You can go to placeyourtrades.com for the next one. I'm probably going to do more of these as time goes by. It's a great way to learn about event contracts. And I always say this about it when it comes to CME Group's event contracts. It's just an additional tool. It's not going to be replacing micros or e-minis. It's situational. I use them on FOMC days, CPI days. I use them on end of the months. Certain days where I think there could be a big move. I don't use them every day, and I don't think there's a reason to. I think that there's a time and place for every product. Just like right now, I'm long some NASDAQ options. I'm not always long NASDAQ options. Sometimes I'm in futures. It's just an additional tool. You can learn about them there. And also I want to talk about my newsletter, anthonycrudele.com. Everybody knows I've been putting this stuff out on Twitter, on Discord. Now you can get it in your email. It's free. You can get my morning thoughts every single day that I put out there. Market environment. It's my strength. You can go to anthonycrudele.com, click on the newsletter, and you can learn more about it. And the final thing is micro mini futures. I wanted to talk about this as well. Last thing, if you're going to trade end of the months and you don't have a strategy to do it, this is where the micros come in and you can test strategies with them. It's much better than trading on a sim because you actually have live money at stake. You can go in there and see it. Micro mini futures, to me, obviously newer and smaller traders, but also to test strategies. Can't say this enough. I've tested so many strategies using micros. It's crazy. So don't forget about the micros.
Awesome. Thanks so much, Anthony. We'll be back next week. We have a great topic next week we're formulating. But again, thanks for your time. And for you, the viewers, we will be back here 3:15 with bars closing. In the meantime, have a great trading day.